Hello guys, hope you had a nice weekend. Happy to be with you. Back again for a trading room. Weekly forecast as usual on Monday. So hi everyone. Let me know on the chat if the sound is good as usual, if the video is fine as well. Give me some feedback on the chat and yeah, say hi to me. I would be appreciated. As you know, guys, we have national holidays. So again, this week there is no trading room on Tuesday and Wednesday, which will be tomorrow and Wednesday. So so a bit sorry for the inconvenience. And again, we will come back on a full track after national holidays will finish. But anyway, I'm happy to share this session with you today. I think there is a lot of things to talk about. Market are still very volatile. We see the pound dollar touching a all-time low. So I think we can find some spot and some conclusion of what's happening here. I'll just put a bit conditioner a bit hot here, you know. Hi Carla, hi Alex, hi Hedy. Thanks for the feedback, guys. Appreciate. Hi, I'm new in bootcamp 100k. Welcome, Tenkan. Hope you will succeed. So as usual on Monday, what I like to see recently, it's the dollar index, which I believe again is one of the main assets to look for. We know there is actually, let's say, markets and especially investors and hedge funds and banks rush towards safe haven asset and gold. Gold also, but dollar, especially this period, is actually a safe asset. So everyone is rushing into the dollar. Which already pushed the dollar maybe 20% up if we look at the dollar index, and that's also why we look the euro dollar and the pound dollar crashing down. So let me just share the screen, but here we are again on the dollar index. I think we already understand the trend here, which is a big long trend, a swing trend, and we also see that on the weekly chart. Sorry for the line and for a lot of drawings here, but you see this RB, this is already a lot of extended movement that we see just here. And again on the monthly chart, you see the lowest point was 90. We pushed to 110. So it's a very spicy push, let's say. It's a very volatile push with at least no retracement. You see, guys, that here there is at least no retracement on the monthly basis. The dollar has been pushing very strongly from May 21, which is almost 1 year and a half. So again, the main spot on the monthly chart we should look for is probably this top here. We are not so far, but again, the market has already pushed a lot. And then there is, I think, huge chance that after the market break, you see this is a very clear uptrend. Okay, so it's market structure. We see it very clearly. Here the market topped and then break it, make a retest. Again here, break this level, come back again here to the demand, break again. So you see this is very easy to find some long spot to enter. Also here there was a bit not the same volatility. You see that here the movement is a bit more extended, and here it was more let's say slow. Okay, this is the same scenario here. We had a resistance, we break out, we make a retest, and this is the same and so on. But What I like to find, maybe we can find it on the H4 chart. Yeah, maybe the daily would be better, but not the. Yeah, maybe the daily, that will be fine. Okay, so again, what I like to find is where the trend is standing at any moment of time. And here we look that when the market pushed very strongly, I think it was probably last week, which day it was, probably Monday or Tuesday, I don't know which days, but the market has pushed very strongly until the market found here, some sellers. Maybe the market was overextended again. So you see it was the same movement. When the market pushed to the top level, the market tend to retrace on a daily basis. So we had here this down movement. We can have also this down movement, maybe not to the lower trend, but also here we had this movement. But the fact is that the market generally will go back to the middle of the trend. Actually, here we are at the middle. So it depends if you are an aggressive trader on a daily trade, on a day trader basis, or you want to swing your position. Actually, here, the market is at the average. You don't know if you want to be exposed here, even on a sell or in a buy position in dollar in general. But the fact is that here already the market pushed. And the market can give any support, I think, around that area, okay, which is again the same setup. The market here was on here it's a key zone. We see the market topped here, breaked out. We make here a retest, so we can go back to this retest after this huge movement. Today, if you go to here, it's the 8-hour time frame, which generally I'm not looking for, but I like to have a higher time scale view. So yeah, on H1 basics today, the market is very flat. You see, I think there is not a lot of movement today. Generally, we had recently, like Monday is very quiet. Depends in which asset. I think oil already pushed, and we will talk about oil right now. So this is the same. This is something also I looked for in oil. Okay, the market was dropping very, very trendy. And again, the market make a new low, and all the time the market make a new low, the market go back to the average, which is again around here. Also this here is a key zone. It's the 82 level, which was the top in November 2021. We make a breakout, very strong here. And today the market, let's say the whole market pushed up because the OPEC meeting, I think they will cut supply. So the market react to this announce. I'm not sure why they are actually cutting supply. I didn't put myself enough on this announcement. But again, the market today is 5% up. So I believe in the dollar CAD and the euro CAD, we already see some retracement, and that's what I expected I think 2 weeks ago, but the market pushed very strongly because of the dollar. So if we move to the euro CAD and the dollar CAD charts, for example here, that's actually the reaction, okay. And I think I already explained most of my point of view in most of the chart, but when the market is overextended and breaks actually Bollinger Bands, for example here, we see clearly that the market is, you see, overextended above the 20 standard deviation. At some point the market will retrace, and here we have a macro explanation to what's happening. Oil is actually pushing up, so the CAD will drop. Okay, so let's say the CAD will gain value. In this case, the euro CAD is dropping. It's same for dollar CAD, I think. Dollar CAD is a bit more complex because the dollar is very strong. So we had this huge uptrend, and then today the market a bit is finding some resistance at that zone. Today the market is dropping because oil is pushing. So this is also one explanation. I think this was a nice spot to get in at earlier today. And yeah, and we might go back again to the mean. I believe here the market, you see, is overextended. We might go back at some point to the mean. Okay, we had actually this. You see this uptrend here, it's overextended, the market didn't retest. You can expect the market retracing maybe to this zone, and if the market is continuing, you can find the market getting back to that place around here. Hi Matthias, I like your questions. Okay, so you said you cannot actually trade the dollar index in the bootcamp, but also in our programs. So again, I'm using the dollar index to understand the overall context that the dollar is, you know, where the dollar is regarding different pairs. What I know is that the I don't know if you know, but the dollar index is a basket of the euro dollar, the pound dollar, and the Aussie dollar, all the pairs which are you know, trading against the dollar, and each one have a weight in that basket. I think I already see dollar index weight. I think we're gonna have the weight here. Yeah, okay. Okay, so you see this is the weight. Okay, so the euro dollar is 57% of the weight of the dollar index. The Japanese yen is 13.6%. So you know, most of the dollar index is correlated with the euro dollar. So of course it gives you, let's say, the euro dollar is known as the, you know, the main let's say the main indication for you regarding what you're gonna do about the dollar, let's say. But at this time the euro is very weak, the dollar is very strong, so that's why you see the dollar index on a long run, you know, very appreciating this time. But again, I think this is always good to remember that the dollar index, this is the weight of the basket. 57% goes into the euro. If I go back to the dollar CAD here, I was already short at some point here and here with tight stop loss. I think today the market already retraced and will likely continue. Okay, when we found here on H4 a top here, second top, triple top. You see, I can find here, I hope the market can break out. Highly believe that, and we can use Fibonacci to understand to where the market can retrace at least. Yeah, so this is the 50 level here. Yeah, today the market already make 100 pips down, I think. 130 pips. Looking at the euro dollar, guys, it's quite the same setup of the dollar index. Like I mentioned, it's 51% of the basket of the dollar index, but you see we have still this very strong downtrend. Again, here today the market is 0.97. Again, we are below the 0.98 level, but again here the market, you see, is at the average. Okay, so it depends where you want to if you like risk, if you know to manage the trade. Here on a daily basis it's very complicated to decide on a swing setup, okay, for the euro dollar. On the daily the market can go over, maybe touch the top here. You see it can go again to that supply, which will coordinate with the trend line and then go back again. So here opening a swing position on the euro dollar, in my opinion, would be very complicated to manage. If you want at least to react, I think Friday here was a very nice, maybe it was not Friday, it was maybe Thursday, Friday, yeah, maybe Thursday here. You see the market react very well. The market make a new low, make a retest, and then the market push. I think it was here 200 pips movement, at least here at 180. The market make a retrace, and again, actually here the market is at the average. So it's very complicated here to make anything. Again, you can trade in the zone. Generally, it's the type of market I like to trade as well. Okay, when you find here a consolidation zone on the M30 level and 15th minute time frame, you see the market is on a range here. Okay, on Monday, very flat today at least. The market is ranging. You can go for some day trades position with a very tight stop loss, build a position. But if you want to hold the trade, you guys have to be careful. We don't know if it will make a new low to go to the higher range or in the lower range. Of course, if we go below, if the market continue and slide down, we might make a new low again to probably 0.94, 0.93, 500, around that area. And again, I think we should be careful for. I think there is still a lot of place to find this, which is 0.90, 0.89. Okay, so there are some place again to continue on the downtrend. So as long as the market will not break, okay, this trend line and will make here a new high. Let's say the market pushed and make a new high here. For example, we close the day above that high. Okay, I will just be even clear. Okay, so let's say the market return and close above, which is here. The market will change the trend from a bearish trend, which is actually very easy to see, to I don't know if we can say that here it will move to from a bearish to a bullish, but at least we will find some neutral, let's say neutral scenario. Okay, and for that the market need to break above 1, which is here 1.03, around that here. For now, if you guys like to trade when the trend is, I think opening and find some short position here is the main advice that you can take. Yeah, so that's very easy to see. Guys, if on the chat you have some questions, you want to talk about any assets, maybe we can talk about gold. We will also talk about indices. Let me know if there is a specific pairs that you want to talk about. Most of the time I talk about the euro, the pound, because we see very volatile movement recently on that pairs, especially you see on the pound here. Okay, here if we touch here it's a all-time low. So this is historical. What we see here is, I don't know, maybe 500 pips movement. Yeah, even more, 800 pips drop. And again, it's the type of day I like to trade. When the market drop like that very strongly, at some point the market, okay, will go back to average. You don't know when, but let's say here. So most of the time, if there is a very huge volatile day like this one, okay, you will say to yourself, okay, here the market is very far from the trend, I will open a buy. Actually here the stop loss would be very tight. You take the first losses of very few pips, okay? Then the market continue and you say, okay, here might be the lowest point. Again, you try to open a buy, then the stop loss taken, okay, so you lose again a few pips. And here again the market drop very highly. You see on lower time, I think you can also find it on lower time frame. Then you go to that one after that news, and then you see, okay, the market is very far from the mean. We already pushed down a few times. I can open a buy approximately here. When I find here that the market is actually reacting with a, let's say, green candle, I can open a buy here again, try to make a stop loss, and then the market will give you back, I don't know, 380 pips, while you have losing here 20 pips, here 20 pips, here you have be winning 380 pips. So of course this require a bit of skills, a bit of understanding. This is quite dangerous to trade that, but again, I know what I'm talking about. I've been, you know, trying to understand a bit more in data and some quantitative numbers at some point that the market have to retrace to the mean. This is mathematical explanation to that. And again, even the market will not push to, of course you will not be able to close here, but even if you close here, which is the mean, you already make here 150 pips, when here you lose 20 and 20, you know, it depends. The same here, guys. You see when the market push drop below the Bollinger Bands, no 20 standard deviation, you make a buy and you can, you know, close half. You can at least create a strategy when the market is highly volatile and go very strongly into one way. So this can work. And here we see clearly on the H4 chart that the market already retrace all the big down movement that we had recently on the pound. Where you put trend line at the extreme, or you say it is broken. Yeah, I put the trend line at the extreme. Again, I'm not using trend line to make any decision on my trade. It just gives me the overall trend in the market. Okay, sometimes if you can, you know, here I will tell you, okay, I will not make any trend line. Even we can find this one, for example. You see the market is not going into that line all the time. Okay, but what you can do is say, okay, I don't use trend line. You can find here there is a high, here there is another high, and here I continue. Okay, there is another high here, you have a high here, you have a high here, and you have a high here, and then the same on the let's say lower here and here and here again and here again. So you see, even here I'm not putting trend line. I know that the market is on a downtrend. Okay, I don't know. If someone is telling you, yeah, when the price is touching the trend line, you will buy. Guys, this is not a good advice. At least it will only give you the overall context and the overall let's say understanding of what's on how the market is trading at least. So here, of course, on the euro, you see clearly that, for example, the market is all the time respecting the trend line. Of course, I will want you to tell to buy here because the price touched the trend line. But at least if you go on lower time frame and you find, I don't know, that there is a demand here, and I don't know, we are far from the mean in the Bollinger Band, stochastics is below 20, so it will have a buy. And again, because we are in a downtrend, you want to buy at the lowest point. Okay, but here it will not give you any indication to make a buy on a trend line. Generally, it will not be sustainable. And we see that already on the pound, that here you can make any trend line, guys. I don't know if you already have a trend line in pound dollar, but even the market is on a downtrend. It's almost impossible to connect all the extreme point using a trend line. What are your favorite settings for Bollinger Bands? Do you use different settings for different time frame? No, I'm using the same settings for all different time frame. The settings is the default one is the 20 standard deviation. So you see period 20, deviation 2. Generally, I like to find. I think you can use Bollinger Bands in any time frame. The fact is that if you open a trade using Bollinger Bands in lower time frame, okay, you should be closing at some point the trade into a lower time frame. It will be not scalable to swing a trade, like open a trade in an M5 time frame using Bollinger Bands into a H1 or H4 or daily time frame. So you have to be careful by using Bollinger Bands. It will work only in the time frame you are working. And you see here, for example, in the M15, I don't know, we have this type of resistance going on an uptrend. Here you see all the time the market tried to push here. It was above the Bollinger Bands. Here again, we break very strongly above the Bollinger Bands. We see on the M5 that the market here, you see, tend to retract. We had also stochastics here at the bottom. So it will be my, let's say, 3-4 signals that will lead me, okay, this might be here a divergence. This might be a selling point for me, and I will sell. But again, I don't want to hold it in the H1, in the H4. You see, the market continue to push. You will want to close it at least when the market goes back to the mean, and the mean is the middle. Okay, so you see here, so it's here, and the market move, and here. Okay, so when you sell here, you should be at least looking for an exit here. It's very, very difficult to hold the trade from the upper Bollinger Bands to the bottom one. Yeah, let's talk about gold. I think the market here is on a clear downtrend. That's something I didn't expect for, but again, you see the market is making a structure, then breaks. Again, making structure and breaks. Here the market is reacting to this supply. I think we can find it on probably on the H1. we go a bit higher. Yeah, the market just opened 2 minutes ago, and the market pushed very strongly on one side, and then we trace. You see, this was also very interesting to work on the Bollinger Bands. I wasn't in front of that screen, that chart just before, but when you see on the M5 this huge movement, at some point the market will go back to the mean. So this is the type of trade as a scalper or day trader I want to look for. Again, the market retrace here. There is a lot of pressure in the downside. I need to clear. Okay, here it's cleared. So I think it's quite the same here, that the main setup we have on the euro dollar, it's okay, we have this downtrend. Okay, again, this is clearly it's quite coordinated with the extreme point here. We got all the time a high or low, sorry, a lower low and a lower high. And here we are quite today at the extreme point at the top, so we might go back at least to the middle, which will be around 200 points from here. So it would be $30 down for gold. And again, I will not be surprising you if we make a new low again on gold. As you see the trend all the time, here on the H4 time frame, the market succeed to make a new low at each period of time. So a bit sad that I've been, missing this opportunity here on gold just before, but this is exactly the type of setup I like to look for. So of course here the trend is a downtrend, so it will be more easier for you to go on the sell because the trend is on your side. But you can definitely, if you like, try to understand the good spot to enter. You can definitely open a buy, for example, here, or open a buy here, or a buy here, whatever, you understand. But the fact is that here we see that the sellers are more stronger than the buyers, so it's preferable for you to go on the sell. But again, a buy is not bad to expecting a retracement. You can be both sides, it's totally fine. Is the freestyle group still active? We still have some traders trading into the freestyle programs, but actually the freestyle is not available. So only if you had an account before you can continue trading it, but you will not be able to register for this program. Yeah, we have the same setup on the S&P. Again, we are still talking about recession, inflation, and that the market can still drop very strongly. What I can expect here is, again, I will not be surprised if we make a new low on the S&P. But at some point, it will bring a lot of buyers coming into the market. I think the market's here already pushed down. yeah, 25%, around 25% from the high, which is a big drop in less than in 1.5 years. Okay, when it was here, yeah, in 9 months. Okay, 9 months the market dropped 25%. And again, when the market drop like that, let's say the US market, of course, the context is not so good to make any buy on the long term. I believe it will let investors and institutions to position themselves into a long term. If you go to the monthly chart, maybe we can expect, I don't know, a drop on the S&P, and then again a recovery at some point. So that's something I'm still looking for as a day trader. You see, you can find a lot of good point. We had this resistance here that we respect. Here we had this demand, and here we make a retest to that. So here again, market structures tend to respect. So it's one touch. Here we break. Here we try to make a retest. That actually we are at the opening. Yeah. So I'm not surprising by looking at this type of chart. Okay, support then became a resistance. Here the market tend to react. I think Tesla today dropped 5%. So yeah, David, when will be a live trading room on Trader Pool? I think Michael already made 2 trading room on Trader Pool. Actually, we don't provide a live trading room on Trader Pool, but that's something that will be available, I think, in the next few months. You see, it's only the beginning in Trader Pool. So yeah, you're gonna have live trading room on Trader Pool. I think you will find Mickey trading stocks live on the Trader Pool platform. Yeah, I'm not surprising by looking at this type of reaction here, at least. But again, at some point the market will. Here we already make a new low. The market will find any area to hold. Okay, I don't know when will be this area. If I look at the daily constructions of the chart, yeah, this might be around. Yeah, it depends how far the market will drop, but definitely we can at least go to 3,400. Okay, 3,400. I think it would be like a nice spot to make some buy, for example. Here the market drop 5% from the new low. Here, if we have a drop 5% for the new low, yeah, it would be around here. So I don't know when. We need to understand and find the moment when the market will try to recover. I think that will be a nice buy, at least on a swing. What's happening in the euro dollar? Yeah, at this time the market is flat in the euro, in the pound. Not a big movement. And regarding the dollar yen, guys, I don't know what to think. I'm still on the same mindset of what I've been explaining a few weeks already. The yen is very weak, the dollar is very strong, but at some point, again, it will not be sustainable for Japan to have a yen so weak. Okay. Here we are still battling at this. I think it was 1,000 in 1998. I think. Yeah, 1998 here. And the market here is battling at that zone, definitely at that zone here. Okay. And when we find this huge consolidation again, the H4, it create a resistance around that area. I think the risk reward if you open a swing position here might be huge. Okay, might be huge. Of course, it will be highly risky. It depends so much the lot size you should allocate. I don't know, but let's say if you give you some space to the market to make an overextended movement, let's say a new high, you want to put a stop loss of I don't know, maybe 250 pips, and you will be able to at least getting back to that area, which is still on the uptrend. Okay, the market can go back at least to that spot to make a retest. It's already 1,200 pips. You risk 250 pips, and again, it's a very wide stop loss, guys. You see, and if you're a bit more risky, a bit more a risk lover, let's say, you can find the best spot to enter. Let's say you open a sell at that spot, you put a stop loss at that spot. It's 100 pips, and you can let the trade swing for a long time. Again, the chance of success for this type of trade is very low, but if this works, it's a very huge risk reward. So this is the type of again of setup I would like to hold for a period of time. Hi Matthias, do you have any tutorials based on the supply and demand strategy? Yeah, we have some webinars on supply and demand. Gil made those webinars, so you can find on our YouTube channel all the video, let's say, where Gil explained in depth the supply and demand, let's say, chart analysis. So I think the main way to look at supply demand tutorials is on our YouTube channel. I think it's a series of videos. There is probably 5 or 6 videos in a row that you can find. Yeah, you're welcome. Anyway, guys, I think we reached the end of the session. So I really appreciate. Again, I think it's been a long time. We didn't make any trading room. So again, it was very intense session. There is a lot of place in the market to take and find opportunity. There is very big volatility. So again, guys, be careful. Try to trade using lower lot size. Try to make your stop loss a bit wider. You see, when we had, for example, in the yen, this huge movement, and you put the stop loss, I don't know, very tight, you get crushed. So be careful. Look at the economic calendar news. Try to not be open when there is a big news. Try to be flat. Try to react about what's happening. And again, We will meet each other, I believe, in next Monday. No, I think next Monday not, but might be next Wednesday in 1 week and a half. Anyway, in your dashboard, we will inform you when will be the trading room, the next one. So yeah, guys, I appreciate again making those trading room with you. Yeah, the supply and demand is a very extensive webinar. I think there is like at least 10 hours of explanation. So you're gonna enjoy, I think, Matthias. Guys, have a nice week. Appreciate having this time with you guys. Goodbye.